When you say you're going very small on QLD, what is your position sizing as a percent of capital? That's a great question. I'll share this with you. On long base breakouts in a good market, I will get fully margined. I will go up to 200%. All right, 200% on margin. In an average market, maybe I'm at just 100%, no margin, just cash. Choppier markets, I might be at 50%, or even 40%, and that's all. I will always err to the side of caution. So let's talk dollars. I think that would be better, okay? Let's suppose that you've got $100,000 total. And we're going to take, and just for the sake of our example to make the math easier, let's assume that the most stocks we'll own is 5. Now we might own 5 stocks on margin in a good market, but in a sloppier market we won't. So then we take 5 and take 100,000 and divide by 5. And how much does that mean? It means there's going to be $20,000 in each stock. And I know you know that. You can say, Pat, I know math. I didn't mean it that way. I apologize. $20,000. Now, that's in a good market. What we're going to do on a long base breakout, we're going to put $20,000 into the stock, but we don't start with 20. On a long base breakout, we buy 10. If it goes up 3 to 5%, we buy, again, we started with 10, we buy $6,000 more. Goes up another 2 to 3%, we buy $4,000 more. So we start with 10,000, then we add 6,000, then we buy 4,000 as it goes up in price. It gives us our total 20,000. We don't buy 20,000 at first. Now let's take it a step further. In this kind of market, with a trade like QLD, which you're looking at right now, is aggressive. By the way, I want to show you something here. Here's QLD, and when we bought this, it was right there above the 200-day. Look at SSO. The same day, it was down here. See that date? 310. QLD, 310. Above the 200-day. SSO, way below the 200-day. Same day, which is why we bought QLD. But we want smaller. So now let's talk smaller. Let's be even more specific. This is not a long base breakout. If our goal was, again, to get up to $20,000 and we start with 10, because this is not a long base breakout, we will buy less shares. So when I say small, I'm talking maybe $4,000, $5,000, assuming 20,000 is what you're looking for. Now maybe your average size on a trade is $100,000, so you do much more. But I'm just doing it for the sake of math. If you normally put $20,000 into a long base breakout, we're only going to put a maximum of maybe $4,000 to $6,000 total in a swing trade setup like this. Why? Again, 2 reasons. It's not a clean and simple base breakout. So we always measure risk, so we buy less shares. So when I say small, I'll quantify it down. If you're normally going to get up to 20,000 on a long base breakout, buying it 3 times, on a swing trade setup, maybe what we're going to do is we'll start with like $4,000 to $6,000. That's it. If it drops a little bit, we'll add more. How much more will we add? Well, if we bought, let's make the math simpler. Let's suppose the first time we bought this, we bought $6,000 worth of the stock. If it drops down, how much am I going to do? Well, I'm being very aggressive with it. So if I bought $6,000, the most I'm going to buy, because I'm going small, maybe $800 to $1,000. That's it. I'm not going to double down. I never double down, ever, ever. So I ease in smaller shares. So again, I'll quantify it. Let's suppose we started buying, and I'm going to be really conservative here. Let's suppose that when we started buying QLD, we bought $3,000 worth. Let's be even real conservative down there. $3,000. It drops down. What am I going to do? Maybe I'm going to buy $500 to $600 worth. $700. That's it. No averaging down, big, pulling the price down. If it keeps dropping, how much am I going to buy? Heck, fire. Maybe I'm only going to buy $200 or $300. I'm going smaller there. Now, that's maybe with what the type of an account a person has. Bigger account, you could do a little bit more. But I stress, regardless of account size, on a setup like this, if you're normally going to put $10,000 into a long base breakout, the most that we should own on this, even buying, adding down, maybe $4,000, $5,000. And it's depending on the size account, okay? Bigger account could be more, all right? Smaller account would be less. The moral of the story is this, and this is very important, Jason. I'll say this again, and I can't stress this. On a long base breakout, I will buy more shares. Here, right there. Longer base breakout in a good market. It's fine. That's good. That's good. On setups like this, right here, we will go smaller, okay? Instead of buying $10,000 worth, like I said, maybe $4,000 to $6,000 total. And each time we add, we buy less shares. And it works. It works extremely well. Now you can say, gosh, we can make more money if it goes up. I'm always sitting there thinking, yeah, and we could lose more money if it goes down. And again, I stress, and I'm not trying to beat a horse here, okay? This is not a clean and simple setup. So by default, if you're going to buy $10,000 on a long base breakout, maybe $4,000, $6,000 tops to start. And that's it. And each time we add, we do even less. And there's a reason why. It keeps us in the game. So that was a long answer, but I've got to do it right. Okay? It's very, very important. Yeah, I'd love to get in and make a killing on something, but I don't want to get killed. So big picture, longer base breakouts, more shares. $10,000, smaller, $4,000, $5,000 total, or to start and build from there. Small.